Hi, welcome to the recording of the Sheep, Lamb and Wool Price Where to From Here webinar. This webinar was presented by Robert Herrmann from Mecardo on the 29th of July 2020. This is clip 7 of 7 and covers the wool-cotton relationship, wool stocks and the volume of wool sold.
The other thing that we look at is wool's price relationship to other products. And in this example, I'm just talking about its relationship to cotton. The red line there is over time is how much wool is produced as a percentage of the cotton clip. What's that, 1990 odd, we were producing about 2.5% of the equivalent amount of cotton that was produced. That's declined over time because our flocks have gone down, but also because the actual market of apparel fibre has grown, and it won't get any bigger. But what happened over that time was that our ratio of price, so how many multiples of price wool was to cotton, increased. So right now, wool's at 6.9 times the price of cotton. Recently, it was up over 10 times in the peak of, in 2018. Going forward, we think that, so in looking back over time, it was sitting around about, 4 to 5 would have been normal. That's improved. And going forward, we think that being currently at 6.9, we think a target level is 8 to 9. Now, the reason that's important is because providing cotton prices don't get any cheaper, it means that our wool prices can go up without it negatively impacting on our price competitiveness. We mentioned briefly before about stocks. Stocks are building, grower stocks are building. They're coming off a very low base though. We didn't have much stocks through the good periods of time of prices. They are growing. As a percentage of the clip, we're now up to sort of 17, 18% of the clip is being held as stocks by growers. It's not as big as we had during the reserve price, after the reserve price collapse. We had a really big stockpile of wool then, and we had a big stockpile after the war. We don't think that it's all that significant now because, that percentage is quite low in terms of historic number of bales. And this chart here just shows it in a slightly different format. So that green line there is sales, which is basically, that's demand. That's what the world's capable of buying and consuming at any one time. When we had all these stocks overhanging, of course, that was negative for price. In recent times, the amount of wool that we've produced has been what we've sold. And it's only just recently that the stocks you can see have just ticked up a fraction, but the amount of wool we've sold has really dropped down. So we don't think it's significant compared to the past, but we think it has implications going forward. If I can just finish with this chart here, what we can see, what this chart's telling us is this annual wool production. So we know since 2008, 2009, we've had a pretty strong market, and we've been selling around about 2 million bales a year. Last year was less because we'd sort of chewed through any stocks we had, and we had the drought. This year was less, but we've actually built up some stocks. So there's almost 2 million bales available in the next 12 months to the trade. Now, if we continue, you'll see on the right-hand side, we've got next year. And we know what production will be. It won't be a huge production year because the sheep numbers just aren't there. But if we continue to only sell around 25,000 bales a week, then the amount of wool available to the trade will grow to about 2.4 million bales for 2022. And it's been a long time since we've been able to sell 2.4 million bales. And so what that tells me is that it's not going to happen in a hurry. The world's suddenly not going to have a huge appetite for anything more at this stage. But we think 2 million bales is something that's can be handled in the system. If we continue to build grower stocks and we continue to pass wool in, then we're going to have to sell wool, sell the amount of wool we sold way back in 06, 07. It's a long time since we sold almost 2.5 million bales. And so my fear is that if in the next 6 months we continue to have clearances at auction similar to what we've had in the last 6 months, then we're growing that amount of wool that's available to the trade. And when the economic recovery happens, it will be in light of having a much bigger amount of wool available to the world than what we've had in the last 10 years. and that will be a dampener on prices and slow things down. So I suppose if we want to cut to the chase, I'm saying if you've got wool sitting in wool stores or coming up for sale, you're well within your rights to not sell it. But the risk is that we might actually have a delayed recovery as a result of not selling as much wool now.
Thank you for watching this short clip. For more information, please visit www.leadingsheep.com.au.